Yeah, so our baseline assumption from the JPMorgan house view is that tapering will start in 1Q of 2022. So that's 1Q of next year. And the rate hike is really not even in our forecast horizon. So it's going to be sometime in 2023 or later than that. So that's the base case we are working with. Obviously, these comments and the several Fed speakers that have come online over the last couple of days to try and clarify these issues goes to show that the market is extremely worried about A, inflation, and B, the Fed's reaction function. Keep in mind that the Fed's reaction function changed last year, but nobody has had a chance to figure out what that exactly is now, given that we have never been in a situation where that reaction function will be tested. So I think there's a lot of uncertainty about that, and investors are trying to figure out how exactly the Fed is going to respond to changes in the economic variables, changes in inflation. I think the key thing that we are seeing right now is that there is a very large fiscal policy thrust coming through, and the monetary policy seems to be pretty content standing on the side and allowing the economy to overheat a little bit. And again, Yellen's comment were suggesting that the Fed has the tools to respond if it needed to, but Powell and others are saying that currently they don't need to.
Should we be worried about inflation? Because we've had a variety of guests on this program saying that no, inflation isn't going to be transitory. We are going to see an overheating in economic conditions and that the Fed may have to move early. But then, of course, if we believe what the Fed says, it's only transitory. Where do you sit on that side of the equation?
So there's two parts to this, right? Like A, how is inflation going to trend going forward? And B, how the Fed is going to respond. I think both of these questions are open-ended at this point. In our view, I think the inflation question really is starting to suggest that there will be some structural inflation coming through. And this is beyond base effects. This is beyond the transitory supply issues that we're going to face as we reopen the economies. And, we have supply shortages in shipping, in semiconductors, and a variety of commodities. So even beyond that, we are seeing fiscal policy coming through. We are seeing ESG. We are seeing a change in mindset about how to manage inventories. We are seeing deglobalization. All of these things are inflationary in the long run, and that should put upward pressure on inflation. This question is not yet decided, though, because we've obviously had several decades of inflation trending lower. So it'll take some heroic efforts to get inflation trending higher again. But that is definitely something that we think investors should consider positioning for. And in terms of the reaction function of the Fed, that, like I said, has changed, and we are yet to figure out where that really lies going forward.